I'm doing 50-50, but I'm away for a few weeks.
That sounds pretty good, mate. We're going to see you in Singapore in about 2 weeks from now, aren't we?
I'm looking forward to it. Yep.
2 weeks from now, you'll be doing your event live, aren't you?
I am on the weekend of the 28th, 29th. I think we're doing Ainslie and I doing a whole weekend of coaching, and I think there's some time before then where I'll be coming in and out of the sessions. But I'm looking forward to it. Stoked to be there.
Live trading retreat on the Wednesday and Thursday as well. Welcome along. Hey, Lenka, I can see you. Nice to have you on board as well. And as Orlando will be putting in a video soon after. But Julian, let's get into this macro market overview. It's a great time for macro markets, isn't it? There's a time there's just big stuff happening. It just makes it all a lot more exciting, right?
Yeah, Paul. Look, I can't really describe how much the world has essentially changed in the last 3 or 4 months. I think pretty much everybody gets that at the moment, that there's obviously the conflict going on in Ukraine and all the other things that are happening in the world. We have a Fed that doesn't have a Fed put anymore that it's offering to the market. So there's a lot of things happening. The dominant themes for me at the moment, as always, are inflation, liquidity, which is so inflation is rising, liquidity is falling, and the dollar is falling because. The dollar's rising. Quite frankly, because people need dollars. If you think about where the price of oil was 18 months ago at about $20 or $30, and now it's over 100, that's 4 or 5 times the amount of dollars that are required to purchase the same barrel. And that's true just across any commodity market out there. I know there's been some recent sell-offs in those commodity markets, but they're still crazy high compared to where they were a year ago even. So that means people need a lot of dollars. But again, for me, right, we're traders, so we get that. We know that there are things happening, and our job is to try and predict what's going to happen next. What happened yesterday doesn't really matter to any of us. So really, when I think about this, trading is about understanding that within that theme, there's a rate of change, and when that rate of change starts to turn around, that's when markets will turn around. So, as I always like to say, we go from one side of the boat to the other. I think it's pretty clear to say that in general terms, everybody, from a trading perspective, is on one side of the boat with the US dollar. I don't know that anybody out there, if you ask them, are you bearish on the US dollar, you're going to get like a zero. In terms of the market, which for me is a sign, right? So does that mean to say that tomorrow we should go out and we should sell US dollars and buy everything else, because obviously that's the right thing to do because it's counter trend and we can make a lot of money because that's where the highest reward to risk trades are? Well, the answer to that, of course, is no, because this might go on for a bit longer. So folks, when I think about this, we just stick the disclaimer up here. You guys have seen this. Hopefully you can see my screen coming through. I always view this in terms of the sentiment cycle. That's why it's behind me on this video screen, and it's also on the slides as well too. All markets swing from extreme optimism to extreme pessimism and the journey in between, right? The Sentiment Cycle by Justin Mamis tries to really describe that and tries to give you a methodology, a roadmap to manage it if you're a trader. So for me, the key thing when I look at it and I look around these markets, and the ones that worry me the most in terms of, are they a little bit overextended? Dollar yen, euro dollar, gold is a worry at the moment because it looks like it's breaking down. It's still not a negative market right now, but it does look like it's starting to worry me on those weekly and monthly charts. The S&P 500, try and identify it where we are now. I think we've broken subtle and overt warnings. I think we're on our way towards the panic phase. We're sort of halfway or a third of the way, or whatever you want to describe it, through that initial move down. 30-year US Treasury yields, I can honestly tell you that there's not been a worse environment to be a bond investor in the last 40 years. Since I've been in the business, I've never seen anything like it. It's absolute carnage. This, again, is an interesting concept because you have both bond prices and stock prices both falling. Traditionally, there's the flight to quality. Oh, I'll buy some bonds because they don't move very much. They're really stable. They don't go anywhere. And in fact, they usually rally when the stock market throws up. No, this time around, both of them have gone down. The crypto world has gone down. Okay, so what you've seen is this whole scale liquidation of assets. So then the question is, where's the anti-fragile asset here? Where's the one that's going to make you money? Gold in US dollars really hasn't been doing that well. Not badly over a 6-month run, but not that well. When you look at it in a more global terms, gold in euros, gold in yen has been an amazing investment. Really stable, really cool, making money on the year, the best place to park your money. Interesting, because it's always interesting to try and look for that anti-fragile asset out there. The only other one I can possibly think of is Chinese bonds. If you have access to Chinese bonds, they've done incredibly well for the last few months as well too, like for the last 18 months. They're almost working a different cycle to that of the States, and especially as that economy in China appears to be maybe slowing down a little bit, that is certainly not a bearish situation for the bond market in China. If anything, it's just equally supporting the case that they're a great investment for the next few months / years going forward as well too. So when I look down this list, what am I seeing in terms of problems? Right, I think the euro is close to a low. Why do I think that? I've been saying this for a while. I just think everybody's on one side of the boat. Dollar yen, I think we're seeing momentum divergence start to come in there on the daily charts. I can already start to see that. Certainly within the euro US dollar, I'm seeing that momentum divergence on the 4-hourly charts. Oil trades absolutely fine. It's doing just fine. Until that breaks 93, I don't have any interest in a bear case in oil. Right, gold, look at the weekly charts, guys. It's come back a long way, still holding. Read my comments, look at the other comments I made about yen and euros. It's a great investment. And in Swiss franc, gold in Swiss franc's done very well, right? S&P 500, we know where it is on this chart, not a great space. Some parts of the US stock market, I think, are now getting quite cheap. You know, Kathy Ark, the pioneer, the founder, the poster child for innovation stocks, right? Stocks that don't make you any money today, but they're just spending it and accumulating customers, okay, but will make money tomorrow. Her fund, her flagship fund, was at $160 about 6 months ago. It's now this week traded at $35. That's not an individual stock, that's a fund of stocks, right? That's an extraordinary wealth loss. However, having said that, like I said, we're always thinking about tomorrow, everybody. That stock then rallied, that stock fund, then rallied 25% in the last 2 days in some insane counter-cyclical moves. So do I think it's the right time to be buying those type of stocks, that type of asset, that type of ETF? I don't know. Look, I can't really say that. What I want is quiet on the lows. I don't want some kind of V bottom. I don't think this is a V bottom type of market. I think people have to get really bored of investing in things and say, I'm never going to do that again. That's when I get interested. Hence my reasoning is I think some of the parts of the US stock market are way beyond that initial phase that we're seeing the S&P in at the moment, right? The S&P 500. And I think like the Kathy Ark's Innovation Fund, ARKK, I think is in the panic/discouragement phase. I think we're in panic phase now. We've had the panic. Whether discouragement goes to a new low, I don't know. But quite frankly, I don't sort of care. It's getting to the point where it's cheap enough for the next leg, but maybe it's not the right time for the next leg. So that's quite interesting. We've already talked about bonds as utter carnage out there, but again, everybody is on one side of the boat in the bond market. Okay, everybody is a seller of bonds. Why? Oh, inflation is ridiculously high. This, that, whatever. Right? I'm not sure anymore. I'm seeing momentum divergence in the bond markets. I think this is the time, and seasonally, bonds have traded literally copybook perfect this year. They topped out in price, bottomed out in yields in November, exactly in line with the seasonals. Come May, they're beginning to stall out, exactly in line with the seasonals. So if they follow that seasonal pattern, they're going to do well for the rest of the year. Yields lower, prices up. Certainly sideways, if nothing else. And then our old friend Ethereum. Ethereum for me, as well as Bitcoin, as well as everything else in crypto world, has reached decision point. Okay, 1,800, 2,000, 25,000 in Bitcoin, between 25 and 30,000. These are critical levels, absolutely critical levels for the market. If we cannot hold these, then it opens us up to a further set of declines which will take Bitcoin into the teens and take Ethereum down to its major support at about 1,000. Okay, so that's the key thing for me, right? Is what's going to happen here. It has to hold. And if it holds, it's going to bounce. And if it's going to bounce, it's going to bounce hard as well too. Hence my reasoning, and I'll finish on this. This is a great 2 to 3 weeks for trading, guys. Everything is on major support. This is critical time. What a great situation to be in if you're thinking about trading right now. Can't think of a better time to be an active trader. So exciting. Volatility is high, so you've got to manage that. But it's such a great time, such an exciting time to be part of this. That's me, Paul.
Cheers, Julian. Thank you very much for today, and thank you very much for many sessions recently. Enjoy the travels, mate. Enjoy the work holiday. The way workathon, whatever it is. Enjoy the working holiday, mate. Have a good time.
Probably more workathon, yeah. And I'll see you guys in Singapore. I'm looking forward to it.
Cheers, Julian. Thank you very much. Up next is Lenka. Lenka, trend trading. How are the markets looking for you?
Yeah, hi Paul, hi Julian. Yeah, it's looking all right. I'm gonna have a look at a couple of charts today, so I'll just share my screen. There we go. I'm going to start with, I'll start with Euro JPY. So this is my favorite for this week, something that I'm going to be looking at closely, and I'm looking for short. So what I'm seeing here is we had a big, couple of days where a price moved lower. Also, there is the head and shoulder pattern on the daily with the neckline being broken. And so I'll be looking at price to come back up to the neckline or back to the trend line, and then look for reversal there. So on the 4 hourly, this is what it looks like there. So we've got the price broken below. I'll be waiting maybe a couple of days, I'm not sure, up to trend line or the neckline, and then looking for short. So that's something coming up this week. The other currency pairs that I'm going to have a look at is Euro USD. So this one I see at the major support there on the monthly. It's the third touch that we've had. So I'm looking at potential reversal around here. May or may not happen this week. It might be a longer proposition. We only have one close on the weekly, and we've got 2 closes on the daily. But on the 4 hourly, there is a little bit of MACD divergence. So I would be looking for the price to pop back up and then look for either a double bottom or a higher low. So that's a sort of setup that I would be looking for in the next maybe couple of weeks. And then I'm also going to talk about the Aussie. So Aussie, we have the presidential election this Saturday coming up. Last time we had the election on the daily, we had 5 red bars. So if price stays below or around the 70-cent mark, I would be looking for short this week, and then see what happens after the weekend's election. There is a bit of divergence, so we might have a reversal possibly after the election. Otherwise, it might just do nothing and hang around, go sideways for a bit. But anyway, it's something that I will be keeping my eye on this week and next. So that's all from me. Thank you very much.
Cheers, Lenka. Thank you very much. Great to have you along. Thanks for that look into the markets. We're now going to have Maya will come in and she will play Orlando's video on US dollar. Orlando's video on US dollar. Look, really interesting to see the names in the group that come along and watch this each week. I know Julian's in, so some of the people that have worked with him are in. a lot of guys in the room, people who've been with us for a while, and make some decent money. It's interesting to see that those guys make the effort on a Sunday to come and watch it live. I know many people come and watch it online afterwards, but I do hope you guys are getting lots of value. It looks like you are to me. Thank you, Lenka. Maya, are you okay to play Orlando's US dollar video, please?
All right, traders, welcome back. Well, welcome back to another week of trading, and a big week for the US dollar ahead. Let's recap what happened last week, and I'm continuing to be very bullish on the US dollar since the Federal Reserve started easing this monumental round of quantitative easing. And let's have a look at job numbers, right? What I dig about job numbers is how continuing jobless claims keep dipping and dipping every single week, right? So that's a red flag for more for an increase of the Federal Reserve asset purchasing, right? So when jobs start to pick up in the economy, the intervention of central banks is no longer needed, right? So they start easing down that asset purchasing program and they start hiking rates. The other number that I want to look at is inflation numbers, right? That was on Friday, I reckon. CPI, we got CPI numbers or Wednesday. I don't remember. Hold on. Well, CPI numbers came higher than expected. That was actually expected. Now, here they are, right? CPI came out at 0.3% and it was expected to come out at 0.2%. And core CPI, that was a big woozy, came out at 0.6%. It was expected to come out at 0.3%. So high inflation still in the United States. So besides high job numbers, right, the Federal Reserve has to act against inflation, which means that they need to start hiking rates. Which is absolutely very bullish for the currency. Now, if we go back to the US dollar, this is the US dollar currency index, which is a basket of the biggest US, the biggest economies or currencies the US trades with. Broke with April highs, right? So I was expecting, and if you notice, last week was very choppy for the US dollar. Right, we were trading inside of a very tight range. That's why I didn't trade at the US dollar. Actually, it was a 1.7 range, right? Right before Friday's breakout. The only trade that I took, I'm sorry, on the USD was, I think it was a US dollar Mexican peso long, right? Which is basically a US dollar bullish position. When the DXY rejected these previous levels. So I'm pretty hyped about next week because of how the US dollar closed on Friday. What I'm expecting or what I'm hoping for, I know that, well, I hate to use that word when trading, but this is in fact what I'm expecting is a retest of the April highs. So on the DXY would look like this, a 103.90 to 103.93, right? So that can happen on Sunday, right? On Sunday open. A retest, right? It could go even lower to this previous base right here. So this is basically my buy zone and on the US dollar between the 103.36 and 103.94, let's call it, this entire zone right here. So I'm waiting for a dip towards this zone and clear rejection, right? And then I'm going to go and find US dollar long. What I like about this is that we already had that clean break of March 2020 highs and April 2020 highs also. So on the daily, looks like this. Targets should be around, well, we haven't been trading in this area for a while. Also, if you notice, this was also a big key level on historic price action right here, December 2016 highs. So let's go even higher to the weekly chart, 2-week chart. All right. So basically, this would be my next targets. Let's delete this line, and I'm going to be adding this one right here. This would be my next target on the US dollar on the long side. These are September 2020, September 2002, 2002 highs around 20 AM. But most importantly, December 2000 lows. So that's a big move to the upside. I'm just waiting for that pullback towards April 20, well, last month's highs, right? For a possible 4% move on the USD, since we've had this clean break of that powerful zone. So heads up to that. Of course, I'm not going to be buying the US dollar currency index. I'll probably play this out against the Mexican peso or the Norwegian krone. All right? Have a safe trading week.
Thanks to Orlando for the video and to Mind Sam for running the session for us. Look, it's interesting times in the market. That US dollar move, it gives us a really interesting perspective on that crypto crash. And if that crypto crash was happening while the US dollar was stable or going down, it'd be a lot more concerning for me than it is while it's going up. Some of that crash is US dollar strength related. So it'll be interesting to see how that plays out. Look, it's fantastic to see so many of you coming in live to watch the session. I know a lot more watching it on Facebook, Twitter, YouTube, and the videos that go out tonight will also be well watched. So it's great to have so many of you guys in. We'll see you back next week. Thank you, Richard. We'll see you guys back next week. In the meantime, remember this, it's really important. Stay calm and make good decisions. And if you do that, it all works out in the end. See you guys in Singapore in a couple of weeks for the trading retreat. Take care. See yous. Bye. Thanks, Lenka. Thanks, Julian.